So let me start recording today, and after talking about my sexy voice, it's good to start a webinar about nested zones this time and realignments. This is a concept that you will have possibly realized about it because we are always talking about daily areas within monthly areas, 4-hour areas within daily areas. So we're going to go through that, and we're going to go through also a way of trying to incorporate the weekly direction and time frame into our analysis, but just quickly, seeing that the weekly is with us also, as well as the monthly and the daily. Okay? As you will see how it all fits together. And then we are going to look at a concept which I call realignment. I learned this concept in a different scenario in the past. Was the first strategy that I learned, the only one, and then this one, supply and demand. And I think that this concept applies here. It has nothing to do with what I learned in the past, but the concept, the word, is what I'm trying to. The meaning of this word is what I'm trying to convey today. Okay. So let's start with a pair you would like to go through. He is asking, is realignment about the monthly correction back to weekly zones? The opposite. Weekly. We'll go through it. Here. Any pair you would like to go through? So we'll go through it from top-down analysis. Pound dollar. Everybody says the same thing always. The pound is like hated by everybody, it thinks. So you are saying also the pound because it's about to break higher time frame. So let's take a look at it. Let me locate it over here. There it is. Okay. So let's start with the pound from zero. Okay, with nothing anywhere. Let me remove this as well. So nothing over here. Okay. So let's start from scratch and drawing all the zones here, and then decide and go through this nested zone concept as well as the realignments. Okay, so it all fits together. We'll go through the pound, and then we'll try, if we have time, which I guess we will, we'll go through other pairs, even equities or anything, because it works on any instrument. So here, let's go again through all this monthly supply and demand control and all that we've been talking for quite a long time. Okay, so here we all agree that this is the extreme, isn't it? On the monthly. We don't have any more data. This is the lowest demand possible. This one was broken, no candle closed underneath. Okay, it was a fake breakout, and then rallied like a rocket. And then it rallied, dropped, and now, don't you agree that this is monthly demand in control here? Okay, so everybody agrees with this? Well, let's go step by step so we all understand the concepts. Okay, there's nothing else underneath. Well, at least on my charts. I guess in the past maybe there was other information here. I don't know, but this is on my charts. This is the lowest demand area that we have. Okay, so now, which is the supply area in control? Yang is saying didn't take out supply. Yes, it didn't take out supply, but this is extreme. There's obviously demand here. It didn't remove this supply over here, but like I said many times, sometimes we don't need to remove the opposing area because the opposing area is like miles away. Okay, so if you are going to wait for this demand area to remove this supply area, then you're going to wait for a few years' time. Okay, so do you see that there is a great demand there? There's a lot of demand there, lots of demand. Okay, but this is now I'm taking into consideration that this is demand because it is the lowest price that I can see on my charts, on my history, and produce a great imbalance there. So price prove me that this is an area of support or demand because it's rallied again. Okay. If I wait for this supply up here, you will have to wait for years. Okay. So now we all agree that this is supply demand in control on the monthly, and this up here are the only two areas of supply that I can paint here on the charts, really. This is a rally based on a drop, and then drop based drop, okay? And these are the areas in control. We might argue, because this is saying it's trying to break supply now, but the levels used up, I didn't take out demand. That's it. So this is, for me, okay, this is not supply. Okay, I mean, there are sellers here. Of course, there are sellers, many of them. Okay, so now the pound is like stuck in this range. You see, we are very high in the curve on the monthly. This is not supply, okay, because it didn't remove. There is no demand to remove. Okay, there is no demand to remove. So this is what's going on here. I mean, it's moving in this range over here. Okay, there's a zone over here as well. There, which is holding now. So price is stuck within all these areas. So according to these supply and demand definitions, this is what we got here. And then we've got this potential area over there. These are the zones that have been causing reactions on the pound. Okay, you see the zones? Do you agree with them? Any questions about them? Remember that sometimes you can't or you shouldn't wait for opposing area to be removed because they are so far away. So far away, that it's silly to wait for that. Okay? Well, he is saying, Alfonso, before the first test of the lower supply zone, would you have classified this as a supply zone due to the biggest sell-off? But which zone are you referring to? This one over here, the purple one? Here, over here. This one, yeah. I mean, the thing here is that on the monthly, it's a little bit difficult to assess this because we are in a range, as you can see. Imagine now. Let me ask you a silly question. Okay, so imagine that you see this on the 4-hour chart. What do you think about this? Imagine. What do you think if you see this? You wait for a break. I mean, is this a consolidation? Yes, this is obviously a consolidation. So, no trade. So the same thing on the monthly. Imagine you were trading the 6 months as direction, and the month, if the monthly chart is your entry time frame, 1 month with 6 months or 3 months. So the 3 months is down. The monthly is in consolidation. We need to wait for some kind of direction. And here we will have the 3 months supply, more or less. So we're waiting for price to rally up there and then to continue that drop that broke this demand over here. But if you see this on the 15-minute or the 1 hour or the 4 hour, then you see, oh, I'm doing nothing here. I'm doing nothing here because this is consolidation. But it looks like the consolidation has got a bearish, a bullish bias. What do you think? We are removing these highs, even these highs. So now this is area of resistance is used up, like you did. I think you did was the one that said that. Okay. So if we remove this flip zone over here on the pound, okay, right there. Look at this. This low matches completely with this high over here and these zones over here. Okay, on the monthly. So if we break this area strongly, close above this month, I don't think so, but maybe next month or in 2 months, then we will have plenty of opportunities to go long, possibly. Okay. Obviously, there will be pullbacks and all that, but it looks like we've got a bias to the buy side. Don't you think? Because we're making higher lows, we're making higher highs, and we are removing resistance all the way up. Any questions about this? Because we're not going to. This is resistance right now. And take a look at this. Take a look at this. Let's draw a horizontal line at the closes. Okay? Here. And let me paint it with another color. Yellow. What is it that you see here? Can you tell me? on this yellow line. Price, this is resistance. I mean, price could not close, okay, on the monthly, could not close above, close underneath, close here, and now we don't know about this month, a few days left. It didn't close about that, so this is obviously resistance. Obviously, this is resistance. So do we want to buy right now there on the pound? We can't. We shouldn't. I mean, of course we can, but it is no higher probability. Look at this. Monthly is not, can't. It can't close above it. And now we are there for 1, 2, 3, the fourth time, fifth time maybe. And so we need to wait for a bigger pullback to buy, a drop into these areas over here, a fresh area of demand on the dailies and all that, before engaging again a buy order. I mean, going long again, trying to attack again this zone until it is broken. You see the logic? So right now, I don't want to sell because there's nothing proving me that this is an area for me to sell. Okay, there are daily areas over here, but they are counter-trend. We are ranging, but we've got a bias to buy. We are creating brand new areas that are removing highs, resistance. But now we are at an area where it is complex. Okay, it's very tricky. And I'm saying unless resistance is broken, forming new demand levels. That's it. So if we break above this area over here, then we will be having nice long trades, I'm sure. But right now it's very tricky. So let's go now to the weekly. Okay, now the monthly is consolidation. We all agree that this is consolidation with a small bias to the upside. Okay, do we all agree with that? Anybody has questions about this? I think this is the way it is now. Okay, perfect. Everybody agrees. So now let's go to the weekly. Okay, let's go from monthly, weekly, days to 4 hour. Let's go to the weekly. So what have we got here? What is the weekly trend? This is obvious. This one is obvious. This has nothing to do with this. Completely different. So now we are in an uptrend. And on this uptrend that we see here, up with here says up with close above that resistance. So here, no, I mean, look at this here. We didn't close above. This is the open, not the close. The close was here, and we couldn't close above this last month high from year 2011, from May 2011. So we couldn't. I mean, this is, I'm not supposed to move on line. Yes, sure. But let me do this. This is the monthly. Okay? And now, let me go here. Let me do this. The highs there. I mean the closest. Okay. You see the closest. The closest, yes. But look at this. Look at this here. This high. It couldn't. So it's a little bit tricky there. But yes, on the weekly, yes, we closed above those open and closes, but not above the highs. So Anan is saying, he's saying he's only joking. Okay. So Anan is saying this is a multi-year resistance, very strong. So now it is complex. I mean, this is a brick wall we need to break. And if we want to dare and trade long, in my sincere opinion, humble opinion, we should look for really great levels of demand, not just anything. Okay? So let's go to the weekly. On the weekly, let's go and analyze the weekly areas. Okay? And I will go through the realignments and nested zones. Okay? So on the weekly, this is the extreme. Okay? One in control there, and there's another one which is down there. Okay? And then this one was removed, and now this one on the weekly This one in control. We broke it a few pips. It was overshort, fake out, and then rallied. And then here we created this zone over here. Now it is demand because we removed these highs and this supply that removed these lows. So this is a valid demand because it removed this supply, which is valid because it removed these lows. Okay, but it was a fake out. Then we've got this over here, demand. Then we've got this one. Okay, and now we've got this one. 1, 2, 3, all this. Because all these are 50% candles. You see, basing, basing, basing. All these three. So this is the whole area. Okay, but now that we know that it is like that, then we could drill it down to these areas like this, because we know that they were penetrated. But for the sake of simplicity, let's draw the zones like that. So any questions about these zones? Are these zones, all of them, valid for you or not? Do you see anything else on the charts? The first part, you is asking, the first part of the gray level was not validated, so could it be blue? The first part of the gray level, this here. I don't know what you mean, Judith. The first, this one over here. Over here, yes. Well, over here, we could argue right now that this is what we got. Okay? That one over here was a drop based on a rally, and then price touched it on departure, okay, and then rallied. But it was not a weekly zone yet there, okay? It's been validated once we have removed this, okay? And by price removing this zone over here, over there, okay, that means that it would validate all these three zones, okay? On the weekly, they were not validated until that happens, but on the daily, we will have areas of demand there that would allow us to trade, possibly here. We will see now, okay? So these are, he's asking, what is your view on the last departure and the dodgy red bar? Not valid due to too much trading in the zone. I mean, this is too much trading in the zone, yes. But if we see some areas here on the daily, which are fresh and would be nice. I mean, this candle over here is what they call, it's not a hammer, looks like a hammer, yes, more like a hammer. That means that there are a lot of buyers there, lots of buyers, otherwise we wouldn't have a hammer. There were lots of sellers there, and then suddenly on the same week it reversed. So it looks like there are lots and lots of buyers there. So this is a good signal for the level, not a bad signal. Okay? This is a bad area over here, in the middle, but at the extreme down here, if we find a level of demand in these areas, within these areas, this is great. So the thing here is that we are in an uptrend right now, okay? And as you can see, Lou, hello Lou, welcome. It's not usual to see you on the webinars, I think. We want lots of buyers to carry you up. That's what Lou is saying. Okay, Sean Verme is saying, so once we have valid demand because supply is removed, are all following demand levels valid without having to remove valid supply? Yes, Sean, like this. This is not valid until we remove this, but once we remove that, then all these zones are also causing part of that move up, and all these zones are validated on the way up, all of them, because all of them are part of the move that removed the supply. The extreme that marks, and will show you the curve, it is down here, and on the way up we will have intermediate zones that will give us the intermediate curve on the way up. But once the trend on the weekly is broken, then we need to go to the extreme in order to calculate the supply and demand in control. In this case, demand in control, because we are not taking into account CP patterns of demand for the curve or supply for the curve. So here, this is the only valley. Don't you agree with this is the only valley of here? Drop, base, and a rally. And then we've got all of this are CP patterns. It's rally base, rally base, rally base, rally base, rally. So the trend is very strong on the weekly. It didn't revert to the mean. It didn't create another valley to give us the opportunity to draw a trend line. Okay, so if this one had dropped lower here, then we would have now this trend line. But right now, we just can't do this. Draw an aggressive trend line after more than 3 CP patterns of demand have been printed on the chart. You see the logic? This is a very powerful direction, trend on the weekly, because we are printing weekly demand areas over and over and over, and weekly demand is being respected, weekly supply on the left, and resistance are being removed, violated. So this is the exact definition of an uptrend as per supply and demand rules. Shan is saying, you have explained this many times, but this clicked for me now. Thanks. Oh, no problem, Shan. No problem. So you see that this weekly is in a strong move up, in a strong direction. So what happens here? The monthly is in a sort of consolidation, but we have with a monthly bullish bias. Okay, that's what we agreed on. Okay, this is bullish consolidation, but bullish bias. It's not a clear uptrend, but it is bullish. We go to the weekly, and what happens with weekly? Is it the weekly aligned? So now we are going to introduce the alignments and realignments. Is it the weekly aligned with the monthly trend? Yes or no? Yes. Yeah, exactly. So it is aligned. I mean, it is the same. It goes in the same direction. Monthly is going up, bias to the upside. Weekly is rallying. So both the weekly and the monthly are aligned. They are pointed up. They're pointing up, so they are aligned. Okay? So if the monthly is up here, but remember that we are at a strong resistance zone, okay? It's up. The weekly is up and aligned. Can we trade the monthly and the weekly zones? They are already playing out. So can we trade them? Judy is saying yes, Sean. Everybody's saying yes, yes, but there's a problem there. Does it mean that I want to wait for price? I want to wait for price to drop into at least the weekly areas, or can I trade on another time frame? Because the thing here is that the monthly is up, the weekly is up and already playing out. It dropped into this area of demand and playing out. So if I am rallying from a weekly zone and it's up, okay, I can't trade the weekly. I can't, okay, because it's already in a trend and the levels are already playing out. I am late on the trend. You see the logic? I am already late on this trade on the weekly. So I can't trade it. So I need to go to the lower time, an hour time frame than the weekly. It is the only one that we have is the daily. You see the logic? Because the monthly is playing out, it's up, and the levels are. It looks like it's not going to drop into this monthly area of demand in quite some time. Maybe a few months. Okay, maybe it will be faster. I don't know, but maybe 1-2 months or more. So on the weekly, price is already playing out. It hit the weekly demand area and rallied. Okay, and rallied. John is asking, you wouldn't go long on the daily if that monthly level was true supply? Now this is something that I'm testing, John. I'm testing this scenario. Let me tell you what I'm going to do, what I'm testing now. I'm testing that. In order to convince, to trade like a robot, I need to have very strict rules. So what I'm testing now for a tester for the next weeks is this. Okay, this is not something you should try, but I'm gonna do this. As long as the monthly is up, I will be trading all daily levels of demand, all value levels. I won't care if we are within a monthly area. So, of supply. So let me tell you the reason. Because I've seen hundreds of times that we reach a supply zone or a resistance zone, and there is a great level like this on the daily, and the monthly proximal line is here. Okay, imagine that the proximal line is here, and this is a great level, or here, better, over here, at a great level. And I will say no because this whole area is the monthly. I'm not going to take it, and this is the one level that will work. So the thing is that as long as the monthly is up, I will take all daily. I'm testing it. Okay, I will take all valid great levels of demand on the daily without worrying about what the monthly is doing, because once I lose, I will stop buying. You know what I mean? You see the logic there. So I will buy like a robot, buy, and then I lose. Okay, I'm out. I'm not taking any more longs. Any questions about that? But this is something I'm testing, okay? Because I've seen that many times. Yes, Hugh wants me to repeat that. So the thing is that if the monthly is up, okay? If it is up, I will buy all valid levels of demand on the daily. I won't care if it is within a monthly supply zone, used up, fresh, non-fresh. I don't care. I will take all daily levels with the daily uptrend, of course. Okay, with daily uptrend. If the daily uptrend is like, okay, broke, imagine that the daily is broken, then I'm not going to take that long. I will wait for confirmation. But imagine that now this is happening right now on the pound, okay? This is the daily uptrend right now. We do have a valid level of demand here, okay? And we've got a CP pattern over here. So the monthly is very high, okay? But look where these two levels are. They are great levels. They remove resistance, and they are with the daily trend. I won't care what the monthly is doing. I'm going to take them. This is what I'm testing now. Yes, I will be using this realignment thing you did. She's asking, do you also need a weekly trend just to confirm the monthly up? I mean, I will be using this concept. Monthly up, weekly up, daily up. So let me finish with this, and you will all understand. Okay. Okay. So the thing here is to look for the alignments. Try to look and locate which is the time frame which is out of alignment, which is not aligned with the previous time frame. So if the monthly is up and the weekly is up and the daily is up, can I trade those time frames? Should I wait for price to drop into those levels if they are already playing out? No, I mean, we shouldn't wait because all of them are up. So what I need to do is to locate the time frame, the lowest time frame which is out of alignment, and that will be my entry time frame. You see the logic? So now the daily is up, the weekly is up, the monthly is up. Let's go to the 4-hour. What happened to the 4-hour here? Okay, what happened to the 4-hour? The trend line is broken, like you just said, Alfonso. He was asking, but to that is 4-hour out of alignment downtrend. Do we not wait for daily demand? Yes, that's what I'm going to say now. Okay, so look at this. Okay, let me go through it again, step by step. Monthly up, consolidation, very high in this resistance. Okay, we couldn't manage all that, but bias to the buy side. Okay, weekly is up, and the level we are already late. Okay, imagine that you are trading. Imagine this. Imagine that you are trading all levels on all time frames, not only for the curve. That you are trading the monthly levels, the full levels, the weekly levels, the daily levels, all of them. So if you are trading the monthly levels, you are late. You couldn't take that one. Okay, it's already playing out. If you are trading the weekly, isn't it already playing out? Didn't we arrive late? to this trade? We are late already. Okay, like Lou said, we are late. So we can't trade this weekly zone. So let's go to the daily. What happened here? There was a level over there, NFP. I was on trading NFP, and then look at what happened. Crazy. Okay, so this level over here was the one that kicked that trade, and we'll go through this level in a while. Okay, with the nested zones. So the thing here is this, that the daily is already playing out. So these areas here on the dailies are valid zones, but the daily is already playing out. It's got momentum with it. So if the daily's got momentum with it, we can't trade it. We shouldn't be waiting for the daily unless the daily is out of alignment. Okay, so the 4 hour, is the 4 hour now out of alignment? It is out of alignment. Louis saying no. It is out of alignment. What is the trend on the 4 hour as per our rules, Lou? Is it down or up? The trend line is being broken. So if the trend line is being broken, now the dynamics on the 4 hour are changing. It's being up, but now we are very high on the curve, and our price removed this demand area, okay, and it's been dropping. So the 4 hour now it's out of alignment. So the 4 hour is our entry time frame now. It's not the daily. Okay? So this is our end. Sorry. 1 second. I made a mistake there. Okay? I didn't mean to say that. The 4 hour is not our entry time frame. It is the time frame that we are looking forward to realign with the higher time frames, the daily, the weekly, and the monthly. So now that the 4 hour trend is broken, when the 4 hour was like this, the 4 hour was in alignment. So it is the 4 hour that we needed to trade. But now the 4 hour is out of alignment. So what we are doing now is that the 4 hour needs to produce a bigger pullback towards where? Where should it pull back to? Now that the 4 hour trend is broken. Hugh said that. What is the time frame we need price to go to? The daily, like everybody said the same. John, Judith, Anand, Hugh, Christopher, everybody. So now that the 4 hour is out of alignment, okay, the trend line is broken. The 4 hour, we go to the daily. Is the daily still up? Yes. Which are the valid levels of demand on the daily? Here and here. So we are not allowed to take any longs unless price. There are two conditions for us to take longs. So I will ask you, two conditions for us to go long. On the 4 hour, we can't go long here because the trend is broken and there is no level of demand over here. Okay, so we need price to make a bigger pullback towards an area of demand on one time frame higher than the time frame that has lost its momentum. You see the logic here. 4 hour lost momentum is out of alignment, and now you need price to drop into a higher time frame than the 4 hour, which is dead daily, expecting that we have a level there. Do we have a level there? Yes, down here. So the only way that we can go long on the pound dollar as per swing and position type of trading, I'm not talking here about intraday or scalping. I'm not doing that. Okay, we are talking always about swing and position trading. Okay, set and forget type of trading on 4 hour and daily swing and position. Okay. Jan Denu is saying, but there is nothing more than the trend line rule. What do you mean, Jan? On which time frame? What do you mean about the trend line rule? The trend line rule here, okay, means on the 4 hour. I'm trying to guess what would you trying to say, Jan? The 4 hour trend is broken, but Does does it mean that we are in a downtrend on the 4-hour? This is one of the rules. We are not in a downtrend now. The the fact that we have a broken trend line on any given time frame does not mean that we do have the opposing trend. What it means is that the market dynamics on the 4-hour are changing. Okay, they are changing. We are in a potential sideways market. That's all it means. Okay. Let me read here. Anan is saying trend line 4-hour will be negated when daily zone is reached. Exactly. You said that, Anan. So we don't care about the trend line. The trend line, we are looking at the trend line because we use it for validating CP areas of demand on that time frame. Once the trend line is broken, we need to wait for one time frame higher where the trend line has been broken. Understood? That's always the same. It's being always the same. Nothing is changing. I'm just trying to explain all this in a more clearer way so that you see how all time frames are interconnected, interrelated, and how alignments work, and why you have to wait for a bigger pullback or a shorter pullback, okay, or a smaller pullback. Yang is saying, when trend line is broken, then we look for levels on the higher time frame. Exactly. If the 4-hour trend line is broken, then now the 4-hour is not our entry time frame. The time frame is the daily. If the daily trend line is broken, then the daily is not our entry time frame. We need to wait for a weekly demand area. If the weekly time frame trend line is broken, then we no longer look at the weekly. We look for price to drop into a monthly area of demand. If the monthly area of demand is broken, then we are in a downtrend on the monthly. You see how all realigns? Maybe I talk too fast this time. Do you want me to repeat it? It's all recorded anyway. But you see the logic in that. So he is saying pull back to daily zone or 4-hour resumes uptrend for entry on 4-hour. Exactly. You said that, Hugh. Or is it best practice to just wait for the pullback to the daily demand zone in monthly, weekly demand uptrend? I mean, both are correct. I mean, here, the only way I will buy the pound now, there are two scenarios here. If-then scenarios, if you call it. Okay? I will buy if price drops into these daily demand areas, waiting, expecting that price, again, the daily, will make a bigger pullback and go with the bigger time frames. Because the 4-hour have already changing dynamics. It looks like it doesn't want to go higher. But when would be allowed, will be allowed to buy again? We have this X scenario. The A scenario is that price needs to drop into daily demand areas because we are in an uptrend on the daily, on the weekly, and the monthly. But 4-hour is out of alignment. But if we create a brand new area of demand and we remove these highs, what do we have now? John is saying till line is intact, also on daily, so we trade the daily. Jan is saying, then what do you look for? 4-hour within daily? Exactly, Jan. There are two ways of trading this. You trade the whole level on the daily. If you have a daily account, I do have a daily account where I take the daily levels, full levels. I don't care about 4-hour. I analyze monthly dailies and I take the dailies. Or if the level is too wide, then I will drill it down to 4-hour. So if you're trading the 4-hour, then you wait for that area. You have two possibilities. Okay, you locate a 4-hour area within this zone, or if you are not comfortable with setting and forgetting a trade there on the 4-hour, or if there are no value levels on the 4-hour here, then you just wait for price to drop there, confirm, and take a trade. Okay, those are the two possible ways. Okay. He's saying, Alfonso, I think that the key word that you just mentioned is momentum. If momentum, then 4-hour longs, else daily longs. Exactly. We lost momentum on the 4-hour. Now we don't have the momentum. We did have momentum on the 4-hour, but now we are just in a sideways market after the trend line is broken, which is what the definition says. Once the 4-hour uptrend has been broken, it does not mean that we do have an opposing downtrend. It means that we are possibly entering a potential sideways market. And the 4-hour is not, we can't trade the 4-hour. We need to wait for a bigger pullback into valid areas of demand on the daily if the daily's got a direction and a valid level. That is the definition. This is not yet valid. We need to remove highs. So John is saying, I prefer to take the daily levels, and if too big, reduce my position size. That's it. Judith is saying, if it drops it, it will have a down trend 4-hour, and you can't wait for it to break to confirm the daily level up. Yes. So right now on the pound, this is what we have. Weekly, monthly up. Weekly up, already playing out. Daily up, already late, playing out. 4-hour loses momentum. So what is the entry time frame now? Now that the 4-hour has lost its momentum, it's out of alignment. So the entry time frame is the daily. So you can't take longs unless price drops into the daily, or this daily area is confirmed and removes the high. Though that is the if then scenario. Nothing else is possible. Okay? Anything else that you do is counter trend. So you must ask yourself, am I a counter trend trader? Yes or no? And then it depends on you. Okay? Anand is saying, would you trade new 4-hour demand levels created in with between the daily demand levels in an uptrend still? I will take only demand levels that remove these highs. Anand, this is a consolidation, so I need to remove those highs in order to validate these areas. In fact, not only that, those highs is because this is a reaction to a daily supply zone. So let me go back in time. Okay, let me use this scale fix option on MetaTrader and go back in time and see where this is reacting to. Look at this. Let me remove this. This is what we have here. Okay, so what do I need in order to buy on the pound? Now it is much clearer. If then a scenario, where is this potential area here on the daily curve or any 4-hour there? Right in the middle. This is a temporary area of demand and control because we are in an uptrend. So we take this to measure the curve. Sorry. If this is broken, then this is the curve. So now this is temporary in control. So we use the Fibonacci tool to measure from this proximal line to this proximal line in control, because we agree that this supply is the one in control because it's the last hit and price dropped tremendously from there. So this is the last area of demand in control because it removed these highs and supply. Okay, so isn't this potential area over here on the 4-hour right in the middle of the daily supply and demand in control? We don't have imbalance there yet. So are we allowed to take a trade there when supply is in control and not being removed? We are not. So you see the logic why on my analysis and other posts on the forum I'm saying I am not going to take this 4-hour trade. This is the logic. What happened to the 4-hour? It was a loss. Unless you are happy with 1 or 2 to 1 take profits. Targets. I'm not. I don't want to take a trade and risk 1% to just obtain 2. I'm not doing that. Okay? So this is why we shouldn't be taking these kind of trades. What happens is that many times they will work. And then you will be tweaking the rules. And you will say, well, the rules say that, but I've seen this like 10 times happening, and I would have taken valid trades, and I would have won those trades. And all I can tell you is, who cares? You know what I mean? Who cares? Rules are rules. And the logic here is very, very big. So I'm trying to find logic to the way the markets work, because logic will keep me on the safe side. Okay, it will prevent me from over analyzing, or from confusions, or from it will prevent me from will not prevent me from will prevent me from pulling the trigger. I mean, if I think too much and I see, okay, these type of trades on the 4-hour work a few times in the last 2 weeks, but that doesn't mean it is a rule. I mean, the rules has many exceptions. What we're trying to do is to prevent these losses, to remove as many losses from our trading plan as possible. I'm not trying to get more winners. I'm trying, with these rules, what I'm trying to do is to remove as many losses as possible from my account, which is very different. Okay? So Phil is saying, can you confirm you calculate the curve percentage between proximal lines, not distal lines? Yes. Always from proximal lines. Phil. So, and then Anand, so unless the higher time frame demand is valid, you do not take lower time frame demand. Yes, Anand. Shang is saying, what do you do when the 4-hour has its own demand level on the edge of the daily zone, of the daily, on the daily zone here, down here, Shan, of the daily demand area? I will take it. I will take it on my 4-hour account. On my daily, I will take the whole daily. But if you're trading 4-hour and then you see that this is the value level, okay? Imagine that this is the value level. Imagine that is a value level down here, okay? This is the extreme. And on my daily, I will be long here, but on my 4-hour, I will be long here. There are two different accounts, two different approaches, two different analysis. The same analysis, but two different entity time frames. Understood, Shan? Yes? Let me read what Hugh's saying. Alfonso, understanding principle what you are teaching, but would find it hard to articulate it. Okay. So, let's go through more examples here. Everything clear, Shan, because I didn't get your answer. So what is that you find difficult to articulate here? So in case I can explain it in a different way, or with more examples. Shang is saying, yes, I see on demand level above that on 4-hour, that's blue candle before rally with white dot. There. This is a demand level over here, right there. Strong imbalance. So I will be looking to go long there. Okay, and then the full area of demand on the daily, on the lower. He's saying, that's my problem. Realignment. Monthly up, weekly up, down, daily downtrend. Where to go long at daily demand zone within the weekly demand zone? Yes, exactly. We'll go through that. Okay, Hugh. There is a clear example now on the pound happening. That happened already. Okay, so let's see this. Now, you're welcome, Chan. The monthly is up, the weekly is up. This is in hindsight, of course, because it has already happened. Okay, this is why the forex sessions are great. We will be doing more in the future. Okay, and you can do that on forex as well and test it yourself. Like I always say, do not believe what I do. Just do it yourself. Okay. So the thing is, here, let's analyze this. Up, up, up. All these are areas of demand on the weekly. So now we are here, there. Let's analyze this weekly. It was formed, okay? It was formed, and what happened there? Let's introduce now the concept for the nested zones concept. The monthly is up, the weekly is up, and what happened there? Okay, it was like this. This is on the daily, and the daily was correcting. Wasn't the daily correcting? Bigger pullback, wasn't it? Trend line was like this, and then the daily was dropping. You see it? Any questions about this? The trend line was not solidly broken. So what happened here? Let me do this. Remove these ones, so they do not affect our. Do we have here? This is the weekly. Okay. Do we have any areas, okay, of demand right on the weekly? There. Look at this. Area of demand. Is that area fresh at the moment? Before all that happens. Remember, this is on hindsight, but there's no other way to show you this. Okay? Christopher is saying fee. Good Spanish. So, look at that. Okay, look at that. This is what happened. This area here provided some longs, nothing happened, then dropped, provided another long from here, second retouch, and now since this zone is already not fresh, okay, we can't take it. I mean, was the first hit, then it produced like 2, 3 to 1, then drop. If you still hold it, you got a nice trade. But now, since it is not fresh from here, okay, we no longer can trade that area. Okay, we can't. The rules would prevent us from take these daily areas. But there is another daily area there for a bear trap. This is a valid area of demand that produces imbalance, and it is fresh. Okay, and this is what we call a nested daily area within the weekly area. The daily area was correcting towards where? What was the daily going to? Was correcting towards the weekly area of demand, which was fresh and in an uptrend, and removed all those highs. Look at this. Remove these highs. So price removed those highs and then dropped into fresh areas of demand on the daily within the weekly demand area. So here that was a trade. Here that was not trade because it was not fresh. And here again there was no trade because it was already touched twice. So we need to wait for a fresh area of demand within the weekly uptrend and monthly uptrend. The daily was correcting. The daily was trying to lost its alignment here and then hit the area here, fresh area of demand within the weekly area of demand, and realigned with the uptrend. This one over here, yes, Jan, this was a second one. Okay, but the thing here, let me take a look, because that could have been a loss. Let me take a look at this in an objective way. Okay, so this one over here, let me remove this all over here, and then this high, let me see what happened here. Okay, what happened there on the daily and weeklies? Yeah, exactly. So that one is a loss. Okay, because you made a higher high and close above. This one is a loss. Okay, like Jan pointed out, that one is a loss. Okay, but the lower is not a loss. Okay, good that you pointed that out, Jan. That one was a loss. It was a valid trade on the daily. But okay, no problem. We take that one. So this is the concept: daily demand areas within the weekly demand areas, with a weekly up and a monthly up. So price now that price hit that area, NFP was right there, we made a higher high, and this V shape over there, and I'm saying the daily trend line would not be valid once the weekly demand is reached. So daily trend line would not be broken, exactly. So that was a valid trade, loss. It was a valid trade, winner. No problem. Some winners, some are winners, and some are losses. So here, what we have here is now we have this value over here, and then we do have this other value over here. So that validates this V shape and this demand level. Okay. Louis saying, can we have higher confidence in nested area? Yes, it's like an odds enhancer. Is the area nested with the higher time frames trend? That could be the question that you ask yourself. Yes, if it is, then you give that area one more point. Understood, Lou? And anybody? So it's like one more point. We are in an uptrend, and that area is nested within the previous higher time frame. When you is asking, when you or saying what you when you took that to trade, the daily trend line was broken, but that's not a problem. I mean, the daily trend line was not broken, Judith. Remember that this over here, we do this, well, there is a rule, a very specific rule that says that. Is this candle, has this candle broken the trend line, Judith? This one over here, on the 3rd February. Can anybody answer as well? Judith saying yes, that he broke it. Anybody can answer? Lou saying looks like it. Hugh saying no. So it looks like Hugh knows the rules and the others not, and Jan knows as well, and Sean as well, and Mark. They all said correctly. So, and Richard is saying, it is a nested daily zone. Would you give higher odds score to the zone that sits on a distal line? Yes. So, the thing here, Judith, is this. There is a very, very, very specific rule that says that in order for a trend line to be broken, we need a full candle, open, high, low, close, and open underneath the trend line. Is that candle the candle that broke the trend line, Judith? No, so the trend line is not broken. This candle, okay, is the candle that confirms the break of the trend line. Okay, but we should be long already right there on this candle, because this candle was the entry point. So this is a valid trade, as per the rule. So these rules are very, very specific, very strict. Okay? If we would have had that, okay, would the trade have been valid? You had an aha moment, Lou. Say, people, would the trade have been valid? People say no, 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 and a couple of you is saying yes, it is a valid trade. Jan said as well. Why is it a valid trade? Which is the candle that confirms the break of the trend line? This one? This one confirms the break of the trend line? Once it's closed, but once it's closed, we are already in the trade. You know what I mean? It was triggered. My trade was triggered. Another thing would be this. Was that trade valid? Now, no, it was not. It was not valid, as per the trend line rule. Okay, as per the trend line rule, this candle over here, this red candle, bearish candle, close. See, high, open, close, low, is underneath. So we can't trade that daily, but we do have one more rule. I mean, Serum forgets plenty of rules, but those rules will help us make better trading decisions. Okay, what happens if the daily area of demand is at one time frame higher demand area? What happens with this trend line? Is it valid? Is it negated? Everybody said yes. Everybody is saying it. Jan, Chris, Hugh, Shan. I mean, negated. We ignore the trend line. We don't care about the trend line anymore. Out. Because now we are, look at this, we have the weekly trend line with us and the weekly trend with us. So that trade is valid because that trade is nested within a weekly area of demand. Otherwise, it wouldn't be valid. If we didn't have this weekly area over here, then that daily area wouldn't be valid. We would have to wait for price to drop down here. or the monthly, which is here. Okay. Okay. Phil is saying it is valid if nested in a weekly manner. Yes, good way of explaining it. Thanks. Okay, no problem. Wait, Phil. So Shang is saying it is okay to take it because once trend line broken, wait for higher time frame area. Exactly, Shang. So is the daily? You have to ask yourself: is this daily area sitting within one higher time frame area of demand than the time frame where the level has been detected? Yes or no? You look at the weekly. Oh yes, it is, because we painted the weekly, so this level is valid because the weekly is up and it is printing brand new areas of demand all the way up. So the weekly is up, the monthly is up, the daily was correcting towards where? It was correcting towards an area of demand on the weekly. We had a loss here, we would have had a loss here, we had a winner here. Okay? It's like Hughes saying the monthly daily combo is helpful to always have the weekly time frame in alignment with monthly. Should that be a rule? That should be, yes. Look at this. We will look at other examples. Okay, I'm just trying. I'm not using the weekly. Okay, I just look at it and look always for nested areas. I'm not using all my analysis, but I take a look at it. Okay, so this is what I intended with this webinar is to show you how the weekly time frame can be added to give us more like an odds enhancer. Okay. To use it for nested areas. That's the purpose of this webinar and this realignment and nested combos. Okay. So Judy say we don't even need to check the trend line if there is a nested area above it. I mean, yes, exactly. But the trend line is there because if price does not, if price on the daily doesn't reach that zone, I imagine this is a zone. We have this. Okay. Imagine that price does not go down there, and then we create a demand area over there, and then rally. Okay, and this trade was valid. Okay, so we do have the trend line there, but once we know that the daily is losing its momentum, or if we had this, it's like on the 4-hour right now. Okay, now on the 4-hour, we don't really need the trend line. Okay, the trend line we can have it there just to show us that the trend line visually tell us that the trend line is broken. So if the trend line is broken with these two candles over here, trend line is already broken, then we can't go long unless we drop down here or we break higher. But we remove this daily supply area, not just this. We have to remove this size because it is a valid area of supply that caused this imbalance. No problem, Nick. Welcome. You had word. No problem with that. So, any doubts about this concept about realignments and combos and nested areas of demand, or nested areas really? So now let's have a 5 minutes pause, and we'll go through another pair from monthly to the 4-hour, and we will look at this concept of realignments and nested areas. Okay? So just 5 minutes, okay? And we'll be back at 4. My time is 4:10. 1:10 p.m. GMT. Okay? Just 5 minutes. Be right back. Sorry guys, I realized that after the break, after drinking some water and all that, I forgot to press the resume button on the recorder. So the last 1 hour and 20 minutes were great, I believe. We talked about many things. Similar to the very first hour, we talked about psychology and many other things, and other samples on the euro pound and the euro SAR, why we took a short, why we took a long. It's a pity, okay, but hopefully, well, many of you, more than 25 people were there, so I'm sorry for that. It wasn't, I didn't say I should pay more attention to that, but I was like a little bit tired. I started to talk about my sexy voice and I got lost. Sorry for that.